Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. We're here with Trending Markets, July 29th, 2015. The Fed has spoken and said very little. What they did say was they're probably on track. They talked a little bit about the labor market. The only hint that we got in terms of any new data coming out in the market, a favorable response in the equities markets with the Dow Jones Industrial Average having a modest rally today, up about 121 points, 17,751. We have seen this market now for the second day in the row really come off of the bottom, and we've been looking at this short-term chart, 480-minute chart, in which what was most important, at least as far as I was concerned, was identifying that although the market has been moving higher, or hitting these different tops, it has been trading in a channel. That channel does have a downside bias. It's been pretty concrete in the way it would move from the top to the bottom of this channel. And then the other day when we hit the bottom of this channel, it was my belief that we would probably bounce off this and move higher, actually start to move to the upper end of this channel. That, in fact, is what we've seen. This, of course, the chart that we're looking at is a Japanese average chart. When we convert this to a standard candlestick chart, you're actually able to see the 2-day advance. Of course, you're not going to see it with the Japanese average chart. Let's go ahead and convert that. And as you can see, sizable rally yesterday, moderate rally today, up past the midpoint of this particular channel line right in here. And in terms of my expectations of this market, I do think it will continue to move higher, at least to the upper level. Now, here's the key though. Because it's a downward sloping cascading channel line, if it only moves to the top of this area and then back down, that actually would give it a lower low in reference to these lows here, these most recent lows. And if that is the case, what that's telling us is we've got a series of lower highs. We've also got a series of lower lows. We're really not making much headway to go to new record tops. And of course, a new record top forming support as opposed to resistance is what I'm looking for at some point in the market. If not, the alternative is at some point to have a sizable correction. At this point, we've not seen any technical confirmation of either. Rather, we've simply seen it with a downward bias trading within these defined channels and defined trading range. Now, dollar turns back to the strong side, up now off of the highs, but still above 97.12, trading up roughly a third of a percent. When you look at the daily chart, though, it is a sizable or nice move. We talked about a couple of things yesterday, that variation on a three-river morning star. And the way that we talked about it, we identified simply called a bullish harami line. We talked about that yesterday. That's these two candlesticks. We also talked about the fact that if we got a long or a continuation of yesterday's upside move in the dollar, we would get that variation off a three-river morning star. Here is a variation off a three-river evening variation. This is almost a pure, basically a pure three-river evening star, because in a cash market, your close becomes your open on the following day. So this is a three-river evening star. Market comes down, then we have this variation. So will we see this market now begin to trade higher? I think that we actually do have that probability, and we will look over the next couple of days to actually implement a long position in the dollar, and we'll probably look to sell or go short the euro dollar. Now, as far as the euro dollar, we've got that reciprocal opposite move. It's now below 110, just slightly though at 109.89, but we certainly have some candlestick patterns that are developing in our daily chart. Let's go ahead and blow that up. This, in essence, is an incomplete dark cloud cover. A dark cloud cover opens at the close of the prior candle. You've got to have a green candle, then a red candle, but closes at or below the midpoint of that candle. Now, the midpoint is probably equal to where we see this low in here, or a little bit above that, but you can see it did move up off of that body size. But when you get the following day moving through that particular price point, meaning this price point right here, and closing near the lows, which we can honestly say we are getting today, you do have a case to be made for what I call an incomplete dark cloud cover. It doesn't close at or below the midpoint, but you do get on the following day a very, very strong follow through in the market. So in that case, we will look to actually go ahead and short the euro. Now, in terms of crude oil, we did get stopped out. We got stopped out with the slightest amount of profits. We were short at 16. We moved our stop to 49.05. The high today was 49.52, so our stop did get hit. It is now well off of those particular highs when you consider it's almost, 70 cents lower than that high. But you did get that big spike, and that big spike is I did want to avoid any kind of a loss of profits and a loss of equity on this trade. Am I happy with the small profit? No, I can't say that I'm happy, but I'm much happier with a small profit than any kind of loss in the market. So I still feel as though we put this trade on, we'll have another opportunity. Let's see where this market wants to move to, if it's going to see some sort of a counter wave. I still think 43 is a realistic target, but we might see this market move higher before it then goes back into that primary trend, and that trend, of course, is lower. This has been Gary Wagner for Trending Markets. We'll speak to you tomorrow for another daily update and review. Bye-bye.